Hello folks, this is Jeremy Cloud from Cloud Financial with our January 2014 Economic Update. In this video, we'll be talking about some of the important events that drove market movements in January. We'll also be looking ahead at what might happen in the coming days and weeks. Please stay tuned at the end for a required disclosure statement. Markets ended the first month of 2014 on a down note, driven low largely by worries about emerging markets' currency crisis that is affecting the economies of countries like Turkey, Brazil, and South Africa. While these issues haven't affected the U.S. economy, they are being felt in the volatility of U.S. stocks. For the month, the S&P 500 fell 3.56%. The Dow lost 5.3%, and the Nasdaq sank 1.74%. While it's never fun to watch a sell-off, we're happy to report that U.S. indicators show that the economy is still growing modestly. Investors got their first look at fourth quarter 2013 gross domestic product, which clocked in at a solid 3.2%, giving us high hopes for 2014. Earnings season also began in January, and with nearly half of S&P 500 companies reporting in, earnings growth stands at over 7%, the best showing we've seen since the fourth quarter of 2012. And revenue growth is at 3.5%. While the December jobs report showed a troubling decline in job creation, January's weekly unemployment claims painted a rosier picture. This could indicate that December report was tainted by seasonal factors. Though we don't have monthly data for January yet, economists are predicting a significant bounce back, putting labor markets growth back on its positive trend. The Federal Reserve FOMC met during the last week of January and voted to continue its program of tapering, slowing its monthly bond purchases by another $10 billion to $65 billion. Investors see this move as a sign of confidence in the economy's recovery, though we've still got a ways to go before we can call it fully recovered. Overseas, the Fed's tapering of its quantitative easing policies, compounded by local political and financial instability, is helping to drive currency sell-offs in emerging markets as investors flee local currencies and buy dollars. Over the last few years, investors have poured money into developing economies in search of higher returns. Now that the Fed is cutting back on its easy money policies, weak fundamentals in many emerging market countries are being exposed and investors are moving capital out, driving down currencies and threatening growth abroad. While these problems haven't affected the U.S. economy yet, a prolonged emerging markets currency crisis won't be good news for the global economy, and some U.S. companies may see their growth prospects fall because of declining demand abroad. It's too soon to know how the whole situation will play out, but we're watching it carefully and actively developing strategies to mitigate risk for our clients. Looking ahead, investors will probably see some more choppy days as we watch to see how the emerging markets crisis affects markets and wait for more domestic economic indicators. Once again, this is Jeremy Cloud with Cloud Financial, signing off for the month of January 2014. I hope you found this commentary interesting and informative, and we'd love to hear what you have to say in the comments section below. If you have any questions about what you heard in this update, or would like to discuss your personal financial situation, give us a call at 256-715-0094. We'd be happy to talk to you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advice is offered by Horder Investment Management, LLC, a registered investment advisor. Insurance and annuity products are sold separately through Cloud Financial, Inc. Securities transactions for Horder Investment Management clients are placed through Pershing Advisor Solutions, Trust Company of America, Jefferson National Monument Advisor, Fidelity, Security Benefit Life, FC Stone, and Wells Fargo Bank, N.A.